What's going on YouTube? Welcome back to the channel. So in today's video we're going to have another trade breakdown because I know people enjoy these. So I thought, why not break down a trade that we had last week that helped to secure my phase 2 alpha cap and my phase 1 FTMO. So let's jump straight into it. Starting on the daily, you can clearly see on 6E that price has been bearish, right? I've highlighted these key swings in price. You know, obviously you've got intermediate swing levels within that, but these are just the overall swing picture, I guess, if that's the right words. Start of June, we had the sweep of buy side liquidity from April. We swept that. Price then aggressively moved lower. We had this shift zone, we pushed higher into it and then rejected, and then we're kind of chopping around, creating these lows down here. So naturally, what am I looking for? I'm looking for shorts to take this down to sell side liquidity, right? Just naturally, I'm looking to play, looking to hop on this trend. H4 again, you had this sweep higher here, big push down in price, and then an aggressive pullback back into this H4 displacement before continuing lower, breaking these lows. And then what do we have? We had this very corrective pullback towards this H4 BPR. So again, naturally, when price pushed into this BPR, I was looking for shorts. It was in my line of sight in the morning. You know, this was something that I had planned out. This wasn't something that I just traded off the cuff. I was waiting for this. So the H1 on 6E wasn't as clear as I guess the CFD chart, which is fine. Not really an issue on that front. I was aware that price could come higher into this H1 displacement and take these sort of relative equal highs up here. But you know, we had a nice sweep and then price started to trend higher, creating some nice structure there. Then come the 18th of June, we had this sweep of liquidity, big push up in price, no real follow through. Then we formed this big high test candle, this big rejection candle, if you want to call it. And obviously that's where the entry was. Hopping over to the euro. Again, the daily and the 4 hours basically going to be the same. You know, bearish price action, sweep of liquidity. You know, very clear and obvious as to where price is heading, or where I'm looking to trade price towards. Just looking to play that bearish momentum, that continuation. And again, 4 hours the same. Trending lower, rejecting this 4 hour BPR, the 50% fib, and obviously a H4 50 EMA as well. So slightly different on the euro. We had this big H1 displacement here, this inefficient price action, which we did aggressively trade into. But again, there was no follow through here. We just simply slapped back down, created this rejection candle. And this was where my entry formed on the 15. So the 15 was pretty simple. Naturally, I would have a 2-to-1. But again, because number one, I was confident in the overall narrative of the trade and the fact that they were challenge accounts, I was more than happy just to let these ones run and secure the funded accounts in one trade, because I'm not really interested in, you know, capping it at 2R if there's a possibility that I can stretch this. So I wanted to stretch it, and obviously it worked out. Again, 15-minute we chopped lower on Tuesday. Big push up. I assume there was some sort of news. I can't really remember. So there was some news. Big push up. Broke previous daily high. Took buy side liquidity here. And then formed this sort of M15 structure. It wasn't that clear. Not something I would, be overjoyed with taking. But like I said, my focus wasn't necessarily on the 15-minute pattern. It was more so on the higher time frame structure. And so, this was a clear area that I thought I could get in. It gave me a good risk to reward, and it allowed my stop to be protected. Because if this stop was taken, then, clearly something would have changed and price would have actually gone higher, more than likely. And obviously we went sideways for the best part of 2 days, just really choppy. And then we started to see some momentum come Thursday, and then obviously into Friday we saw that final push lower, taking us out for 3.5 R, which was just over 5% on our challenge accounts because of the risk that we had. So that is the trade breakdown. Again, keeping it really, really simple. Just playing the higher time frame order flow. Just playing the trend. Just hopping onto the trend. And securing that R. So that's going to be it for today's video. If you did enjoy, give it a like, subscribe, all that jazz. And I will catch you in the next one.